It's important for a good leader to have a genuine interest in the organization's mission and those people who are charged with accomplishing it.
Welcome to Friday Five with Dave Adams. Today, we're going to have a great opportunity to have a conversation with the Director of the Department of Insurance and Financial Services, Anita Fox. Director Fox was appointed to this position in January of 2019, and in short order, of course, this year in 2020, as our top regulator, she's had to deal with the extraordinary circumstances associated with the COVID pandemic and its implications for the financial services companies that DIFS regulates. You should know that DIFS, in addition to banks and credit unions and insurance companies, DIFS also has responsibility for Blue Cross Blue Shield, a number of HMOs, consumer finance related entities, domestic and foreign insurance companies, and many other financial services organizations other than those that we're, of course, familiar with depository institutions. So I know you're going to enjoy this conversation, as am I, with DIFS Director Anita Fox. Well, DIFS Director Anita Fox, welcome to the podcast. I'm really looking forward to a great conversation.
Oh, thanks for having me here, Dave. I'm looking forward to this conversation as well.
And I know I've told you this before, but for our viewers and listeners, I want to say this. I reflected back in my 23 years here as CEO of the Michigan Credit Union League, and I think I've worked with 6 or 7 directors of what was OFR, OFIS, and now DIFS. And I want to compliment you publicly for your great communication style and reaching out to stakeholders. I know I'm one of many, and certainly during this pandemic and during our regular course of business, I've been impressed with the way you've frequently reached out to me for short conversations and helped us communicate our views. I think that's a great quality. So thank you for that.
And thank you, because it has definitely been a two-way street, and especially during this crisis, really being able to reach out and speak with you and some of your members and be part of the process together, it's really been great help to me, and I appreciate our ongoing conversations.
Well, I'm looking forward to talking about your career journey and your perspectives on your current role. But although I mentioned it in the introduction, why don't you give us kind of a quick overview of what you're responsible for at DIFS?
So at DIFS, we regulate the financial services and insurance industries in Michigan, and that's everything from insurance companies, agents, state chartered credit unions and banks, and all kinds of other kind of lenders like auto, payday lenders, mortgage lenders, and many other types of those consumer lending as well.
And when Governor Whitmer sought you out and appointed you as DIFS director, what were some of your first thoughts and reactions? It's obviously quite an honor, but maybe share that with us.
Well, I had been practicing law for a really long time, and my first thought was, how am I ever going to wrap this up? What am I going to do with all these files? What am I going to do these boxes? How are my clients? How am I going to make sure that my clients' work gets handed over and that they don't miss a beat? And so that was kind of my first panic. Like, how am I going to do that? But more importantly, obviously, I was really excited about the opportunity. I feel really lucky at this point in my career to be able to have moved into something that doesn't just kind of abandon what I did before to move into something new, but really took what I've done before, built on it, but allowed me to apply it in a whole new context and expand the areas of knowledge and dealing with different industries and different people. So I go to work every day very energized, which at this point in my career, a lot of people don't feel that way. It's another day at the office, and I have the privilege of not feeling that way because it's also new. Even though I feel like I have a lot of depth and a lot of things, a lot of it is brand new and just the situational, and nobody anticipated where we'd be right now. And even the auto no fault that I stepped into early on. There've been a lot of stops and goes about whether that was ever going to pass. And, we've heard, we've heard this before. We're going to reform the system. And then boom, it was there. So it's been an exciting time to be here. And I really feel fortunate.
And you have a very distinguished career practicing law that prepared you for this position. But maybe you can speak to that a little bit. Many, many years of practicing law and a lot of insurance industry experience. Maybe just touch on that if you would.
Sure. So I grew up in Michigan. I grew up near Detroit, and then I went to Kalamazoo College on the west side of the state. Then came back over to Ann Arbor for law school. And then after that, I went to work on a presidential campaign out of Washington, D.C. But I had the good fortune to be flying all over the country and really getting to see a lot of different places and people. But then after that was over, I stayed in DC and I worked for a very large firm that had a lot of national and international clients, so a lot of really smart and good mentors. So I was really fortunate. I did that for a while. And then I moved back to Michigan, kept working for my DC firm from Michigan in the early days of telecommuting, like we're talking dial up modem and before FedEx packages. And then, moved my practice over to a Michigan firm and kind of kept doing what I was doing. And I was a litigator, so I got to participate in cases that touched a whole bunch of different industries. It's not like being a tax lawyer where you kind of can very much dig into one area of the law and kind of apply it to different contexts. When you're a litigator, you have different contexts. It might be a railroad, an insurance company, a bank, and then you've got different areas of the law. And so you're constantly kind of having to start over and analyze, which is great in a lot of ways. And maybe you happen to prepare me for a role where you have to kind of pivot to different kinds of legal issues and of different contexts all the time. So um, I think for practicing law was a good stepping stone to being able to be effective in my role, partially from that analytical side and just from having to make decisions um, with imperfect information sometimes, but being able to gather the best information, weigh risks and benefits. All of those are very important to a lot of the decisions I make today.
So early this year, we were all hit by this COVID-19 pandemic, and it kind of transformed the way all of us approach our roles. But I'd like to hear a few perspectives on the DIF's director role, the state's top financial services regulator in a normal environment in terms of what those duties entail. And then secondarily, talk about how all that changed with COVID.
Well, one thing I have to say in both contexts is I was very fortunate to step into a job where I had a talented, dedicated, and committed staff that really had a lot of subject matter expertise coupled with a commitment to their industries and to Michigan consumers. So they were already working hard. And when the pandemic hit, all of us, industry, government, moved to a new reality at a speed that if we'd all been sitting around boardrooms trying to plan out how long it would take us to do that, would never in a million years been anywhere near, a few weeks time. So I think having that talented staff and already committed when I had to turn to them and say, we have to keep going. This is a pandemic, and part of a pandemic is going to be an economic impact on our residents. And we have two areas that are essential services, and we lobbied to make sure that they were recognized as such. So we knew that our industries were going to have to keep going, but in a different way, and how we were going to be able to adapt. So first thing, having that staff already committed was a huge thing. And I think it goes back to that relationship that we had been building with our industry partners as well, because all of you had to keep going as well. And we had to figure out, how do we do what we do, and where can we still maintain a adequate regulatory, but be flexible for the new issues that you are going to face. How do you do business when everyone can't be congregated in your lobby? How do you get signatures done? How do you get things notarized? Working through all those problems together, having that base with the people that we were already having conversations with the league and the bankers and the insurance companies was good. A good foundation for that, as well as having a staff that was willing to put in the extra hours when they all of a sudden were juggling their kids at home, like all of us, and caring for elderly parents and figuring out how to get groceries and all those things. So it was really a huge team effort internally and externally.
It's so important, isn't it, for any leader to have that skilled, dedicated team. And in turn for a leader to realize how important it is to be a part of that team and not just see yourself as above them or different than them. But let's talk about leadership qualities. So you've been a leader, you've had a wonderful career journey, and now you're in this position with so much responsibility. I'm sure you think a lot about and read a lot about leadership qualities. What are your perspectives, just in a generic way, before I talk about credit specifically? What are some of the things that you think are most important for leaders of any organization?
I think it's important for a good leader to have a genuine interest in the organization's mission and those people who are charged with accomplishing it. I think people can tell when you're genuinely interested in what they add, what they have to do, what their goals are for their industry, for their careers. Because when people sense that, I think they first understand and work with you better. They understand that you are on the same page. And the second thing is, then if you got to be able to make decisions, and sometimes they're decisions that may be different than each of the people who gave you input. But if they feel heard and you communicate why you're making that decision and what's the rationale and get buy-in from people so that they know that you wouldn't just do it for some other unspoken reason. There isn't a hidden agenda. When you can't explain it, you can say, I can't tell you more about it. This is the way we have to go. There are a lot of reasons. This is why I'm doing it. I think it's really important for a leader to genuinely connect and be interested in what they're doing. And because if you try and be the leader from the outside and don't feel part of the mission and don't feel engaged with the people that you work with, I think people sense that, and you won't have the kind of team you need to work together effectively and efficiently. So for me, that I think that connecting on that interest is really important.
That authenticity and understanding of purpose is so important, and being able to uh, earn the trust of those you work with. So talk a bit about, so credit unions in particular. I mean, credit unions and banks, at least I'm familiar with, have this wonderful camel rating, and the M stands for management, obviously. So from your perspective as a top regulator, when your examiners and supervisor examiners and others are looking at an institution and trying to assess management, kind of talk a little bit maybe about what you think is important for a credit union in terms of management and leadership capabilities.
Well, first, kind of from the big picture, right? We have a common goal in making sure that credit unions are serving their communities while ensuring that they're taking necessary precautions to manage risk and ensure future security. And that's what a manager has to convey to their regulator, that this is um, an institution that is entitled to the public confidence. And so we like to make sure that we let managers manage, that it's a business and it's your business. And we see ourselves, I think, a lot of the times as some of the things we have to put in guardrails sometimes. This is kind of where we want to walk, and we try and communicate that. This is what we're going to be looking at, but then let you do your business, and hopefully be able to give you suggestions about ways that we've seen from our broader experience of working with a lot of other credit unions, much like what probably the league can offer in a lot of ways to credit unions. You look at your own world and you can do a lot from your own experience, but being able to take the experience from whether it's from your regulator or from the league about how things fit in first to the world of credit unions in general, but into the whole financial picture and greater into the state and how that works with the national picture as well, I think is really kind of what we're looking to do. So we see management as a key aspect, and that's why it's one of those factors, because a manager is going to guide and help the employees do both the business side and make sure that they're on track in a regulatory way so that we can free you up to serve your communities by not having to worry about financial stability and all of those pieces and analyzing them for yourself.
That's great perspective, and I think very unique for the conversation we're having, where we can talk about leadership and management, but in your role, you mentioned guardrails and you mentioned letting leaders lead, letting managers manage. but certainly the role of the regulator is to make sure that banks and credit unions and others are operating in a safe and sound manner.
Absolutely.
So that's a really tricky balancing act that you have. So you talked a little bit about your responsibilities and the different sectors that you're responsible for supervising. Let's talk about credit unions and their uniqueness. In our industry, we talk a lot about credit unions being unique, our not-for-profit status, and we're tax exempt, and there's reasons for that. But in terms of credit unions' impact on the economy, how you see that, how you see credit unions in their role relative to the other institutions that you supervise, maybe you could comment on that.
Sure. I mean, it goes without saying that one of the things that credit unions offer the state is that you are in your communities. And there are communities that are very different from one another. We have very rural, spread out areas, we have urban centers, and some of those areas, but for their credit unions, would be vastly underserved by any kind of financial institution. And we know how important having a relationship with a financial institution is to economic well being. I mean, I think about people during the pandemic who don't have a financial institution. I can never keep cash. And I have cash that I have kept this whole time. Nobody wants my cash. And if your only way of doing business was with cash, what would you do? If you don't have a credit card and a debit card or whatever, you start going out to other pay services that don't have the guardrails. In some sense, we regulate them, but they're not federally insured. They don't have many of the other kind of safeguards for consumers, and people are more vulnerable to fraud and, at their worst moments. So having an institution that knows you and has a relationship with you, who knows your community when you're trying to get a loan, who can say it may not fit exactly into the square that that somebody from a regional institution or otherwise might look at it and says it doesn't fit everything. But the individual credit union, knowing that community, knowing that borrower, might be able to say, but I know it's a safe loan for this, and I'm going to help you make sure it stays that way. I'm going to check in with you more. I'm going to help you with the business side of it. I can reach out to you in the same way when they begin to get in trouble. If they have a relationship with you and with your institution, they may come to you sooner and talk with you, and you might be able to steer them on the right path or avoid. You don't really want to foreclose on their assets. You want them to pay their loan. And if you have that relationship, the chance of having those conversations and guiding it in the right direction, I think, is crucial. I also think that in times of economic insecurity, especially, those kinds of relationships have a really heightened importance, because people will sit back and hope they can fix it on their own. And often that's what gets them into the most trouble. You get behind a payment, then you're behind two, then you're behind three, and now your credit rating went, and then you try and get another, your home equity, but you can't anymore because you just really dig yourself a hole. And having that relationship, I think, avoids that. Another thing is with your volunteer boards, I think you have a unique situation here. We're in a moment of national reckoning again. I mean, it has happened in waves in our history about race and inclusion and diversity, and we're taking a hard look at this. We're looking inside at our institutions and our government institutions and our hiring practices and our pools. How are we advertising to people? But we're also reaching out to our institutions, and I know you and I have talked about this, Dave, partnering on this, because we know that access to financial services for all communities is super important. And I think of a volunteer board and as a credit union, a really wonderful place to access some talent in the community that may be untapped otherwise, because it's this vicious cycle. You have to have board experience to get on a board, and credit unions may be a great way to reach out to some people in the community who have been marginalized from those, but have the economic perspective and the finance perspective and the consumer perspective that may be so important, and getting a broader group involved. We're finding that really permeates the business side of it as well. We know that for every 10% more racially and ethnically diverse a company's senior team is, earnings before interest and taxes are generally 1% higher. I mean, that there's an actual cause and effect that we can trace by the numbers, that companies in the top quartile for gender diversity on their executive teams were 21% more likely to outperform on profitability. So when you bring people into the boardroom and you bring them in, they bring a perspective, they bring you customers, they bring you staff that looks like your customers and understands your customer base. So I think credit unions are going to be leaders potentially in that area because they're in those communities and they want to reflect those communities.
That's such great perspective. So diversity isn't just the right thing to do, it's good business, because bringing that diversity and inclusion into the boardroom and into the staffing makes any company align better with the people they serve, understanding their customers and members and so on. I appreciated you bringing up our volunteer boards of directors, because that's really where the foundation is set, right? In the boardroom, where the discussions are about service and helping people, serving members and communities. And yes, you have to make the ratios work, and you have to have a margin, and you have to have capital. But that's such an important part of the credit union difference. That's a segue to another question. So we talked about COVID. We're kind of absorbed by it right now. But when you look at leadership of the institutions you supervise, and let's talk credit unions specifically, what are some of the things that you think they should be most focused on? What do you think? What are the things that worry you as a regulator right now in this economic environment, and what you hope for in turn with those who lead banks and credit unions in this economy?
Well, some of it we've already seen, right? That Michigan's credit unions stepped up to help their consumers and to work with us and the governor. Nearly half of our state chartered credit unions stepped up to provide loans to businesses through the Paycheck Protection Program. More than 140 credit unions voluntarily agreed to assist financially during the mortgage issues that were beginning to arise as borrowers became stressed, and part of our My Michigan mortgage relief program. And so, you know, we already saw some of what we need. And I'd say what keeps me up in this context is probably going to be very familiar to your members. The crisis started out as a health crisis. Everybody knew it right away. Like, how are we going to keep people safe? People are dying. You know, what's the exposure pathways? What are we going to do? And that was front and center. The economic began to, you know, as we had to take steps to address the health, began to have some economic impacts. We did it. But truthfully, we don't know what the economic impact is going to be, and how long and when it's going to hit, and how are we going to come out of it. I mean, I can certainly say that most people who were either in the regulatory or the business space in 2008 feel that the institutions were far better positioned coming into this crisis than the last one, just in terms of the stability of the institutions and where they were, and what their numbers looked like. So that's a positive. We've seen some government reaction to the severity of this crisis. We're hoping that there is some more support for consumers now, because people are still suffering and the economy has not rebounded. So really keeping our eye on what are the indicators. You know, what's going to be our first indicator? Is it mortgages, foreclosures? Is it going to, making sure that these PPP loans are forgiven? You know, there's a lot of things to do, and keeping in touch with one another, whether it's through an organization like the League, so that credit unions aren't just in their small space, and the fact that you guys can reach out and look at what's happening on the national level as well, and work with us, and we can work with other states as we try and figure out what is the best way to get prepared for what may come, and how do we meet consumer needs but still remain solvent and safe on a great unknown. The uncertainty.
It strikes me that the skills that you have that I referenced that are so relevant to the challenges we're facing are some of those same skills that you're advocating for credit union leaders, and that, communicating with your members, reaching out to your stakeholders, doing the networking, collaborating. Because what I hear more than anything right now with credit union leaders is uncertainty. What you just said,
Absolutely.
it's like hoping for the best and planning for the worst. It's the calm before the storm, however you want to characterize it. but certainly the way you describe that is really spot on. And that is that we've gone through this health crisis. We're still fighting our way through it. And the economic implications are still yet to be seen. So um, I think for leaders, whether it's credit union or bank leaders or your other regulated entities, or for regulators or for support organizations like ours, it's being able to kind of keep your ear to the ground and being able to navigate through this with so many unknowns. Very well said. So the last question, Friday Five, as this podcast is called, we've had four really deep questions, and the fifth one's a little bit easier. It's a little bit of a softball, and that is personal interest. Just help our credit union leaders get a little bit more familiar with Anita Fox and what some of your personal interests are and what you enjoy when you're not working long hours in your DIFS director role.
So I've always taken my professional obligation seriously. It's just part of who I am. But I've never lost sight of the fact that my family and those close to me kind of have to be front and center. And so there were a lot of balancing to be fully engaged in my career and my work and fully engaged raising a family. You may know that my husband passed away when our kids were 10, 14, and 16. And I was full-time litigator. So they were hard times to make sure that I was given 100% in both realms. That didn't leave a lot of free time, but I tried nonetheless to stay engaged in the community as a board member, for example, for the Children's Trust Fund for 8 years, which is dedicated to the prevention of child abuse. I was counsel to a number of charitable foundations. I was on our homeowners board. I was the PTO president, tried to stay an active member of my kids' school. I was a PTO president 3 times. That is a thankless job, but I wanted to be involved in my kids' schools and their sports activities, which so many kids are involved in now. And we used to just play out in the backyard. They're much more organized, and so juggling all those balls sometimes meant working at night. But I thought it was really important to me to stay engaged in my community, stay engaged with my family, and also continue in the work I was doing. So it's all kind of a mix of just trying to keep a life going that is purposeful and meaningful, but often requires a little less sleep and competing obligations. I think you see it all over with working families.
Well, thank you for helping us to humanize, for lack of a better word,
Mhm.
the regulator and the regulated and the world we operate. And I think it's so important in forums like this to give us an opportunity to learn a bit more about each other. I just think they're so important. And as you were talking, I have to say something you may not know, you don't know about me, and probably a lot of the viewers and listeners don't. Uh, my father passed away when I was 3, and my mother raised 4 boys,
Nice.
uh, 3, 5, 7, and 10 in
Wow.
an era where women didn't have a lot of opportunities. Those were low income paying jobs, and the respect I have for any parent or anybody who has to deal with that kind of adversity, with the huge responsibilities that come with family and raising children, you have my utmost respect on a very personal level.
Thank you.
And I hear that from other leaders I talk with, and when we get to learn a little bit about each other, the importance of family always comes out. And I think for leaders where that's particularly important, and you mentioned it earlier in your earlier comments, your incredible team, for leaders to be able to be empathetic and understanding of what their employees are dealing with in these extraordinary times, not to mention customers and members and other stakeholders, is such an important thing. So thank you for sharing that with us. And I just want to say on behalf of the Michigan Credit Union League and our credit union industry, thank you for your good work and what you're engaged in now with this pandemic. As I referenced on the front end, the importance of outreach to stakeholders and communications and accessibility. You do that all so very well. So DIFS Director Anita Fox, thank you so very much for being on Friday Five with me.
Thank you. And I hope that you'll continue to reach out and that your members will reach out to my team and to me. The communication is all through the organization. I think you'll find us very accessible, and we hope to continue that.
Well, that was a great conversation. I'm sure you would agree that to be able to hear from our DIFS director, Anita Fox, and her perspectives on leadership and how she's approaching her important top regulator role here in Michigan was a real treat, as well as to hear some of the personal perspectives that she shared at the end of the interview. I really appreciated her description of the importance of authenticity and leaders showing a genuine interest in their people, their teams, and the importance of communicating and listening and staying true to the purpose of the organization that one is responsible for. Specific to credit unions, I loved how she talked about the importance of gaining and maintaining the public's confidence. Um, from DIF's perspective, letting managers manage while providing suggestions for effectively running the credit union. Certainly, Director Fox understands the important and unique role that credit unions play in their communities. She mentioned the volunteer boards of directors, our commitment to diversity, equity, and inclusion, and the importance of truly having an impact in this challenging economic environment. And she referenced several of those examples with the My Mortgage Relief Program, the PPP lending, and numerous other things that credit unions are doing. So our thanks go out to Director of Department of Insurance and Financial Services for the state of Michigan, Director Anita Fox. Thank you for joining us on Friday 5 with Dave Adams.